What's up, everyone? It's Caddy with MoneyVest. So we're dealing with quite an interesting market here, with the S&P 500 down about 70 basis points. The NASDAQ also down over 80 basis points, and the Dow Jones dropping almost 200 points here on the day. So hope you guys are doing great. We've got lots to unpack. We had Jerome Powell earlier today talking a little bit more about inflation, interest rates, monetary policy, all the main stuff. And then of course we've got Tesla earnings to talk a little bit more about. Tesla's down a little bit over 10%. I mentioned in our Discord earlier, when the market just opened, I'd mentioned that, I wouldn't be surprised if Tesla ends up being down a little bit over 10% on the day, and that's exactly how much we are down at the moment. I did close out my options. So again, if you want to get access to all the options alerts, trade ideas, buy and sell alerts, everything's going to be included. So, that's what we're talking about, folks. 95% profit closed, unrealized gains of a little bit over $10,000. So before the day started, it was at close to 7,000. And then of course, towards the end of the day, and I had I held on to this right here, the 265 call, this one would have been pretty much worthless all the way down to 98% profit, and just ended up pocketing just under $4,200. And the other two calls, like, this is what's actually interesting. They were so far deep in the money because Tesla at one point was trading at 270s, and they are now very close to being at the money. Like, they were 215, 210 calls, but I got insane premiums when I sold them. So my break evens still well over, not mine, but the buyer's break evens still way over 270. So that's why, people often ask me in options trading, but especially if you're new, you'd be wondering, like, how is it possible that these options are actually up 57%, 40% when they're in the money? Well, that's because the premiums when I sold them were really, really high, and they are now really, really low. I mean, for this one, for example, the 215, or actually the 210, this one, which is up almost $4,000. This one I got, I think, a little bit. So right now this shows $4,000 profit, but I think I sold it when it was at $67. $67. And if you go check this call out right now, I can guarantee, not guarantee, but I can tell you that it's going to be trading at roughly around $25 per contract. And when I sold it, it was at $67, right? So that difference of $40 is the profit of $4,000, what you're seeing. And that's up 57%. So it is really, really important to hedge your positions, in days like today, because if you're not hedged, it becomes incredibly challenging. And of course you end up, dealing with a day like when Tesla's down 10%. So that's just one of the things I wanted to mention. And one more specific thing that I pointed out in our market update channel, I basically mentioned that I'm not getting a good feeling with respect to the market's divergence with yields. This is something that we discussed in our yesterday's market update, that the market continues to move higher, not really higher, but it's not really reacting to the idea that the 10-year yields are indeed getting up to almost 5%. The high for today, 4.966% on my last check. 4.996. So we're almost at 5 basis points right now. And this is a level that we haven't seen since 2007. And Elon Musk's earnings call yesterday was not that great. It was, it was kind of dreadful to listen to, and, kind of makes you miss Zach a little bit, right? He used to manage the calls a little bit better. But nonetheless, I mean, higher interest rates are hurting Tesla. Higher interest rates are hurting Enphase. Higher interest rates are going to hurt the economy. I do not say this lightly, right? I'm saying this only because I believe it, or I expect it, right? Why else would I actually say it? Because think about this for a second, okay? Tesla's been around since when? 2010, maybe 2011, right? When did Tesla sell their first car? Okay. When I Google this, it says 2008. Okay. Interest rates since 2008 have just been going down. And for the majority of the last decade, if you go back 2013 to 2023, the last 10 years, the auto loans, right? More specifically, the 10-year rate, the 20 or the 30 or the treasuries, have not really gotten up to where they are today, right? We're seeing a 16-year, 17-year high for treasuries. So if you really think about it, Tesla, Enphase, Nvidia even, a lot of these companies have never really been in this environment. They've never really been in a higher interest rate environment, right? So this is a new reality for all of us, for individuals, for investors, for businesses, because, a lot of these businesses are not even 20 years old, right? A lot of these companies that we talk about, like Palantir, for example, how is Palantir going to survive? Well, it's still flushed with cash, So that's a little bit more extreme conversation. But what I'm trying to say is this is a new reality for a lot of individuals, for a lot of investors, for a lot of companies. Apple's been around for a very long time. Apple knows what to do. Microsoft knows what to do. Google knows what to do. Meta knows what to do, right? They've been around for a very long time. They've experienced higher interest rates and then lower interest rates. They've kind of gone through these recessions. They've gone through deep, times of higher interest rates. But when we talk about companies like Tesla or Enphase or Nvidia, even I would argue AMD to some extent, these are not new companies, but they are companies that haven't experienced higher interest rates in over 16, 17 years, right? And this is a very, very macro-driven sort of environment, right? So there's no control over the interest rates from the CEOs, from executive levels, from management. They can't have any control over interest rates, right? They don't. That's a macro factor that's affecting their revenues and their earnings directly. It's literally a direct correlation because as interest rates go higher, that's going to lower demand, straight up. So that's a little bit of a problem that I think we need to address. And I wouldn't be surprised if something starts to break apart here very soon from an economic standpoint, because as I mentioned in our Discord earlier today, the bond market's 3 times as big as the equity markets, and equity markets are still underscoring the idea how much of a damage higher interest rates can really do on the economy and the markets. And I think that is something that we need to be prepared for. Volatility right now is pushing higher. So if you come over to the VIX, we just crossed over 20. I've shared a cheat sheet with our members. I've been constantly updating all the Discord members with where we are with volatility and where we need to get to. Like as soon as we get to certain thresholds, it becomes a very, very good risk-reward trade-off. And there is a trading window that kind of opens up as soon as we get to those thresholds, and it starts to close in when we are coming back out from those thresholds. So again, link's going to be down below. If you want to join our MoneyVest community, you get access to everything, members-only private videos, trading view charts, all the benefits, including our spreadsheets, including our stock reports. Everything's going to be included with the link down below. So Tesla here down 10%, Amazon's flat, Apple's flat, Microsoft's flat, Nvidia, Google also very, very flat. Eli Lilly's selling off here. And we did have a little bit of semiconductors, again, Applied Materials, Lam Research, Clack Corporation also pulling back. And this right here is the entire market selling off pretty aggressively. So all sectors were down. So 11 sectors in the S&P 500 selling off. And in the last 1 week, we've got energy and consumer defensives pushing higher. Everything else is down. And in the last 1 month, we've got energy and comm services pushing up. Everything else is pulling back and selling off here at the moment. Now, when it comes to the one-day performance of volatility, coffee prices, corn, wheat, soybean, everything pushing higher, with canola, rough rice, natural gas, soybean oil pulling back, and Bitcoin's here a little bit over 28,700, and Ether also back up to over 1,500 at the moment as well. So Jerome Powell, again, had a speech today at 12 p.m. Eastern. He said that inflation is still too high and lower economic growth is likely needed to bring it down. I mean, this is about as clear as Fed gets, right? They're pretty much saying that we want economic growth to slow down so that inflation can come down. Like, this is literally what they're saying at this point. I mean, there's not even hiding it anymore, right? Jerome Powell is about as blunt and unhinged as it gets. So he said, acknowledged the recent signs of cooling inflation, but said Thursday the central bank would be resolute in its commitment to 2% mandate. And he also goes on by further saying that inflation is still too high, and a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down substantially towards our goal. And we cannot yet know how long these lower readings will persist or where inflation will settle over the coming quarters. While the path is likely to be bumpy and take some time, my colleagues and I are united in our commitment to bringing inflation down substantially or sustainably to 2%, is what Powell also mentioned. So the market just closed. It is 4 p.m. in New York, midnight in Dubai, and of course 1 p.m. Pacific. And, different times, of course, all over the world. But we've got NASDAQ here down almost 1%. We've got the S&P 500 down 85 basis points. And the Dow Jones here dropping over 252 points. But this right here is the real thing to be watching. I mean, this is what is driving everything at the moment. I think if yields continue to push higher, 5%, 5.2, 5.25, 5.3, 5.4, I mean, it's just going to get more and more challenging, because I will have to, moving forward in most of my stock analysis, I will start using a 14% discount rate. I will start using higher discount rates, because the only reason we're taking on that additional risk is to make more than the market. And if he can get 6%, 7%, on treasuries, right, we need to push our risk a little bit higher. We need to have lower discounted rates, the lower fair values to compensate for that additional risk and that reward, right? So our discount rates are going to go higher to 14%, possibly 16%, depending on how high the yields go. And that's obviously going to lower our fair value. So I know there's going to be a lot of comments in my future videos that my fair values are once again even lower. Well, because the markets are changing, right? The economic landscape's constantly changing, and the higher the yields go, the higher our discount rate will go along with it, because that's considered as the base rate. So if the yields are pushing higher, my discount rate is going to go higher and higher. That's thereby going to lower and lower the fair value of each company. Thereby, present value of all future cash flows are going to be worth less. That's how math works. And unfortunately, that's where we are. So I can already see it. There's going to be some comments, if my fair values do end up dropping in our future videos, but blame the 10-year treasuries. Don't blame me, blame the treasuries. So moving over to volatility, we already discussed. Crude oil prices, we're already starting to push back over 89, close to $90. Those geopolitical tensions obviously are increasing day by day, so we want to be on the lookout for that as well, even though I'm not going to discuss it here because it's mostly specific to markets, but keep a close eye. We'll be discussing this on our Discord as well. But Ether here just a little bit over 1,500, and Bitcoin just over 28,700 as well. So we're starting to see a little bit of that momentum, but we're still kind of struggling at that resistance at the moment for Bitcoin. Now going over to the markets, so S&P 500, so this right here is going to be the chart. As we now start to roll right back down. As expected, that was a lower high for the S&P. We didn't quite get up all the way up to 4,450, 4,400, but instead we're starting to roll right back down. So, that's exactly the whole idea, the whole point of how we're not out of the woods yet. And we need to be very careful with where we are in the overall trend. And the S&P looks like it's going to retest its 200 simple moving average at 4,200, 4,230. And then, of course, the markets will decide whether they want to go higher or lower or even break down below this level. The next support is going to be 4,173, sitting right over there for S&P. Talking about the NASDAQ here, NASDAQ in a very similar pattern. So coming down to that support, almost exactly where we got supported and validated previously, getting rejected at that 100 SMA, continues to make these lower highs and these lower lows. And that next support is going to be sitting right over there at that lower low. And of course, if you do end up breaking down below further, 12,700 at that 200 SMA is going to be that next level to watch for the NASDAQ in the future. Talking about Apple here, Apple just modestly down 22 basis points, still getting rejected at that 100 SMA at close to roughly 177, and that next support is going to be all the way down to 171, even as low as that 100 simple moving average, the 200 simple, I'm too sleepy right now, 200 simple moving average is going to be that next support level close to 169, 170 for Apple. Talking about Amazon, and Amazon here also selling off, down intraday, so green on the day, red candle though, still not able to fill this gap. 100 SMA is going to stay put at 133. Support level is going to be here at this support at 127, all the way down to as low as 121. So what we'll do is we'll keep track of where we are for each company. So let me see if I can create a very quick note here somewhere. So we'll just do Apple, downtrend, making lower highs and lower lows. Amazon, downtrend, making lower highs and lower lows. Tesla, obviously breaking down quite aggressively, right? There was a lot of supply sitting right over here at 270s, 280s, as much as $306. And Tesla here selling off down over 9%. And this is where the support is. Lots of demand, lots of green support here sitting for Tesla at the moment. And this is exactly where the previous resistance is. And this is where the support is. So in case Tesla breaks down, below this level, in case Tesla sees a pretty dramatic sell-off here from this level, then the next support, unfortunately, is going to be all the way down to 153 for Tesla. So this is where the next support is going to be kind of in line with my fair value, my intrinsic value for Tesla, and at which point I would be interested maybe dollar cost averaging a little bit more, or maybe selling some puts at those prices, but that is going to be that next support. And right now we're coming down to that 200 simple moving average. Talking about NVIDIA also selling off here, more or less the horizontal pattern here, so just consolidating in that range between 470, 480, and support level is going to stay put at 396, close to low 400s for NVIDIA at the moment. Advanced Micro Devices also pulling back, so we've got the 200 simple moving average, and we've got a massive support right over here for AMD. So that's going to be that support level. In case we see a breakdown below 100, Then unfortunately for AMD also, we're going to be watching closer to $80 as that next support for advanced micro device. So that's going to be that next support level to watch for the company. Talking a little bit about PayPal. And PayPal, unfortunately, makes a new 52-week low, starting to break down below this level, down about 1.77%. So there's a lot of weakness for PayPal, low volumes, and it just continues to make new 52-week lows. There's doesn't seem to be any stopping this stock. Earnings is everything. Everything's on the line for PayPal for earnings, literally. Like PayPal is going to put everything on the line for earnings here on November 1st. So, we better come out with some beats here, or else PayPal is going to be in some really, really big trouble. Support level is going to stay put roughly at $40. And the reason I say that is because it's not got a very strong technical support anywhere, right? I mean, it's got just significant amount of potential downside if it continues to break below these levels, and there's not a lot of demand that's showing up anytime soon, right? So technically speaking, there is unfortunately support levels sitting further down than where it's trading at the moment. Square here, support level is going to stay put roughly over at $41 per share, so that's really where we are. Resistance is going to stay put at $52 for a Square at the moment. Talking a little bit about Meta Platforms and Meta here, also rolling over down a little bit over 1.3%, and resistance is going to stay put roughly around 324, 325. So that is a resistance level to watch, with the support level staying put roughly in the low 300s for Meta, and of course all the way down to as low as 275, to as low as that 200 SMA sitting roughly at 245, and of course we got a gap to fill all the way down further. Netflix, on the other hand, had a very nice move to the upside, right? So completely opposite to what Tesla experienced. Netflix here up over 16%. We broke down the numbers yesterday after the bell, and Netflix reported some pretty good numbers, very strong net additions in global subscribers, not to mention very strong beats on both revenue and EPS, and a very nice gap up here on heavy volume for Netflix. So, we're back in that range. Resistance is going to be up to 450, 452. So that's going to be that resistance level, and we've got a support sitting right over here, roughly low 400s. Talking about Google, and Google here also starting to pull back a little bit, so down about 22 basis points. So resistance is going to be all the way up to 144. So this right here is going to be that level to watch, with a support all the way down to 126. So we'll see if we actually do get down to that level, but this right here is obviously going to be an intermediate support level to watch for Google as well. Talking about Microsoft, and Microsoft here also just consolidating sideways, and resistance is going to be all the way to $340 per share. So this right here is going to be that level for Microsoft as a resistance. We're right now just still consolidating sideways in that range right over here. This is the range within which it's been trading. Resistance, support, and right now we're just consolidating sideways. Talking a little bit about Shopify now, and Shopify on the day just consolidating sideways, down almost 2%, very much on trend with everything else, and resistance is going to be $55, and this right here obviously is the gap that it needs to fill eventually if you ever come down there. It's looking pretty close, right? $50, low 50s to as low as low 40s, mid 40s. That's going to be that support level all the way down to $44 for Shopify. And finally, Enphase also hurting, down over 6.4%. Tell me something I don't know. Just getting crushed here, down 6%, just getting rejected at 123, 131 again for pretty much the third time, and then just continues to sell off even further. So this is where we are with Enphase, once again just coming down to that green rectangle, that support in the low 100s for this company once again. So hope you guys enjoyed this video and found it helpful. Make sure you drop a like. Don't forget to subscribe to the channel. The bottom line is that this is quite an interesting time for the economy, for the markets, all on the back of treasury yields. So we'll continue to update you guys as I find more information. Happy investing. Make sure that you drop a like, subscribe to the channel. Link to our Discord Patreon is going to be down below if you're interested in joining. There is a 16% annual discount available till the end of this month. And again, you'll get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. As always, happy investing. I'll see you all in the next video.